All right, let's get right into it. Today, we're going to decode a market analysis to build a really clear, actionable playbook for the next trading day. No fluff, just strategy.
So this is the exact question that kicked this whole thing off, and that's precisely what we're going to answer. We're going to break down the analysis step by step to build a solid, profit-focused game plan for tomorrow. Okay, first things first. Before you can predict where you're going, you got to know where you are, right? So let's start by getting a real feel for the market's current mood as the trading day wrapped up. So here's our starting point. The Sensex closed at 73,134. But that number by itself doesn't tell us much. It's the story behind that number that really sets the stage for what's next.
Now this is where it gets interesting. We're looking at a gain of 1.65%. That's not just a small hop. The source material points this out as a strong bullish close. What that really tells us is that the market ended the day with some serious positive energy.
But man, the day itself was a total roller coaster. You can see it here. We had a fall, a nice recovery, then another sharp sell-off, and then a final bounce to close things out. So here's the key takeaway. Volatility was super high, but that final bounce, that shows us that buyers were jumping back into the ring, ready to push things higher.
All right, so we've got the market's mood down. Now let's get a little more technical. We're going to dive into how the source material uses option chain data to find the market's invisible floor and ceiling. This is super important.
So to really get the next part, we need to talk about open interest, or OI. The easiest way to think about it is like a huge crowd of traders. When you see a really high OI at a certain price, it means a big crowd has gathered there, making that price level a big deal. And this slide shows you exactly where those crowds are gathering. On the support side, that's our floor, there's a massive amount of put OI at 72,000. It's like a safety net. Then you look up at the resistance, the ceiling, and you see a very strong wall of call OI at 75,000. This tells us the market is probably going to have a really tough time breaking past that 75,000 mark.
So if we put all of that together, what do we get? The market is essentially range-bound. It's kind of stuck between this strong support zone down around 72,500 to 73,000 and this tough resistance ceiling up at 74,500 to 75,000. If it breaks out of this range, either up or down, we could see a really powerful move.
Okay, and now for the main event. This is where we turn all that analysis into an actual game plan. We're going to break down the 3 most likely scenarios for tomorrow and lay out the exact strategy for each one.
Let's walk through this playbook. First up, Scenario 1, a bullish gap up. If the market opens above 73,500, that's our signal to buy a call option. We'd be targeting that 74,300 to 74,800 zone with our safety net, our stop loss at 73,000. Now, Scenario 2 is the opposite, a bearish gap down below 72,800. This hints that support might be breaking. The move here is to buy a put option with a target down around 71,500 to 72,000 and a stop loss at 73,300. And finally, Scenario 3, which is often the most common, a sideways open. Here, the strategy is patience. You wait for the first 30 minutes, see the range, and then you trade the breakout. If it breaks the high, you buy a call. If it breaks the low, you buy a put. Simple as that.
Now, before we wrap this up, the source gives some absolutely critical warnings and pro tips. Seriously, think of these as the rules of the game. They're designed to protect your money and help you make smarter moves.
The analysis points out a very specific situation. Someone is holding a 74,900 put, and it's flagged as risky. So why is it risky? Well, because you're essentially betting against a market that just ended the day with a ton of upward momentum. An immediate drop isn't a sure thing, even with that big resistance wall at 75,000.
So what's the plan for managing this tricky spot? It's a 2-part strategy. If the market gaps up at the open, moving against you, the advice is to get out early and cut your losses. But if you see some real weakness when the market opens, then holding on to that position could still work out. And finally, here are 4 pro tips that you can apply literally any day. Number 1, don't just trade on a gut feeling. Number 2, always watch what the market does in the first 15 to 30 minutes. Number 3, keep an eye on how that open interest is shifting during the day. It can tell you if the market's mood is changing. And last, but most importantly, a stop loss is not optional. It is compulsory. It's your ultimate safety net.
And all of this brings us to the final big question. We see the market coiled up like a spring between that strong support and tough resistance. So are we about to see a massive breakout? Or is this roller coaster of volatility just going to continue? The playbook is ready, now it's all about watching to see which scenario plays out.